Welcome to the Algo. My name is Justin, and in this video, I want to show you my product. I've spent over 6 years and over $2 million developing it. I built the system for me because I like to make simple decisions, and now I'm able to make all of my investment decisions in less than 5 minutes a day. So without wasting any time, let's see exactly what this Algo product is. Let's start by looking at some live ideas. So right here, I can see Donut. It's due for an invest alert. We're going to action it on the last day of the month. And it says 3.57 risk reward. All I have to do is click on the buy button. And what that'll do is bring me over to here. And then it actions the idea. You can see the order's been sent and the stock has been ordered. I can click on cancel if I want to cancel that order. So we can order from the PDF by clicking on any one of these icons. We can go down to different idea types. Here we have swing ideas, which are based on the 1 week time frame. We got FactSet, we got Meta, we got Kava, we got DKNG. Same thing, just click on buy. On the platform, it's very similar. So if you decide to join us, all you have to do to order ideas is click on buy. It's literally that easy. I'll click on buy for Meta. Let's see what happens. I already got that one ordered. Let's go down to one I know that I don't have. Let's click here on, say, WHR. Boom, order sent. That seems pretty easy, huh? Yeah, but as I mentioned in the intro, this has taken me a long time. I'm talking 6+ years just to develop the system and literally millions of dollars. So in this video, I'm going to show you how it should not even take 5 minutes a day to make your decisions, because I do get decision fatigue. I want to make my decisions as easily as possible, but I need to also understand the rules of the road, which basically means that when you're driving on the road, you understand what red, yellow, and green mean. We need to understand the same thing for the market, because that's how the market works. I'm going to go through 5 different sections. So if you want to jump forward, just look down to the timestamps below. Right now, we're going to go through the Jusin Report, which is basically how, at a high level, I get ready for everything else that follows after this. Then we're going to look at the end of day report, and I just tease that out for you. Then we're going to look at an algo cycle, because believe it or not, the stuff is pretty important. I'll take a quick little pause right now to show you this. So we're going to go to 3, then we're going to go to 4, and then we're going to go to 5. And specifically, I'll show you exactly what's going to happen at the very end here. Pause if you want to right now. So I'm going to explain exactly how I go through idea generation for my Algo portfolio, which is easy for me and easy to shadow. But over here, this one's actually quite hard for me. It requires a lot of discretion. There's a lot of thinking. There's a lot of sweating. But as of right now, that portfolio is doing better. So I've gone through this thing so many times. I've talked about all of my struggles. And at the end of the day, I've made every possible mistake. So what I built is something called an algorithm. An algorithm seems pretty cool, but all it really is this. It's just a simple system. So let's look and see what an algorithm is. Algorithm. It's a process of rules. So what does that mean? It means conditions. If this, then that. We have an input come in, and then we have a set of rules, and then the output goes out. That's an algo. Pretty simple, huh? Yeah, seems simple. Why did it take so long then? Well, let's go through and find out exactly the reason why. Jumping here to section number 1, let's go right back up to the top. All right, Jusin's report. So as it says here, I do a few things every single weekend. So on the weekend, I do my prep. I talk about the S&P, and I try to find out whether it is, again, like we said on the highway or on the road, is it time to stop, time to be cautious, or time to go? I do that for a weekly and monthly focus. So here's my note for the month of November. This was shared on November 2nd. So here's my notes. I said it exactly right here. Pause if you need to. I'm not going to go into every single little detail, because honestly, it's just going to take way too much time. Right here, it just has caution. So after we fell below 667, which at the time we were at 682, I gave the warning. So that's part of what drives my decision making. I need to know what the market is doing, because the market is the only really important thing to me before we look at individual stocks. When we think about the broad market, there's the S&P at the top of the pyramid. We've talked about this before. It's right at the top of the pyramid, literally. And then we have ETFs in the middle. So here we got things like SMH, XLG, RSPT, but we got a lot of individual ETFs. There's a lot of them. I'm not going to go into every detail. But if we look here, this is the S&P. These are ETFs. These are individual stocks. So SPY, let's say QQQ, and then we have something like, say, like an NVIDIA here or a Palantir. So if we want to understand what's happening to our individual stocks, well, BS rolls downhill. If the market's been bearish, like it has been for the last couple of weeks, your stock's probably not going to be able to fight that. It's going to get dragged down with it. But when the market goes up, not all stocks go higher with it. So our job is to make sure we understand what's happening with the market, not with feelings, but with an algorithm, which means conditions or rules, rule-based analysis. That's it. All right. So now we understand what the market's doing on roughly a 1 month, and then what we're doing on a 1 week. So I apply those notes to know how much risk I want to take on. I do this report for you. I give you the notes on YouTube for free, but I do go through and provide significant more detail. So here's what I do every weekend. I update my S&P 500 notes. Then I go through the Algo Portfolio, which we're going to go through a little bit later. I look through my 401k. I update my buy and sell pockets. And then I look for ideas. Ideas come last. So when it takes 5 minutes a day, it's because I've done all the work to be ready for that. I know the rules of the road. When I go onto the road, there's no question what I do at a red light. I've taken my course. I've passed the exams. I stop at a red light. I'm cautious on yellow. That comes with experience. Then there's yields, there's stops, and all the things in between. Well, that's exactly what we have here. So I'm telling you what to be mindful of. Higher lows are sufficient. Watch for the increasing, volume is generally increasing, which is bullish, but watch out for this area. There's a yield sign right there. If we fall below that area, watch out below. And then every week I update here. Here's one from November 17th where I said that there's mixed signals. So what should you do? Probably take your foot off the gas. When in doubt, be patient. That word's going to come up during this video. Here's the notes. Watch out for FOMC on Wednesday. Well, isn't that what took the market down last week? It's exactly what took the market down. And the notes were there. So I take all those things and I summarize them into levels. I got them right here. Center, R1, R2, R3, S1, S2, S3. It's easier to visually digest when we go to our platform here. We're going to click on SP 500. There's only so many tabs. This is one of them. So right here, we can see that we have resistance and support. It's like we're playing football. If we make it to R3, it's a touchdown for the Bulls. If we make it to S3, that's a touchdown for the Bears. Bulls want to see the chart going up. Bears want to see the chart going down. It's that easy. So I convert all of my analysis, all the prep I do, which literally takes hours, into this. And then a visual diagram that looks like this. This is what I need to be successful. Remember, this product's built for me. Okay, so that's the first thing. You're probably familiar with these notes as well. This is the dot system, like I said. So there's traffic lights and there's rules for the road. Well, there's rules for trading. So we got the 1 day, the 1 week, the 1 month, like we're driving in on the street. We're going through a school zone in the city. We're making our way to the highway. Then we're on the highway, but now we're on the Autobahn. So different time frames get zoomed out. You can go 100 miles an hour on an Autobahn. You can go 60 miles an hour on the highway. You can't go 60 miles an hour in a school zone. You got to be more cautious. And those things happen more frequently. There's more stop signs on city streets than there is on the highway. You should know that. I also go through and provide all of the key dates that I think could drive the market for that week. So here are the technicals, right? Fundamental analysis, technical analysis. This is the technical analysis. It's a couple of dots with some numbers and a couple of little lines. That's it. I'm a simple guy, like I said in the intro. This is what could drive the market. Anything that is high impact, we want to be mindful of it. So right there's a warning. Watch out for that day. So if you don't know what to do, on Monday, I warned you, look for that day right there. That's the day to watch for. I shared this on the 15th. So I'm not Nostradamus. I just do an incredible amount of homework to be ready for that 5 minutes a day. The traffic lights, like I said, and you should be familiar with these bull and bear recipes. So there's no argument about where the chart is going. It's either going up, down, or it's trying to change the trend. So once we get a bullish trend, higher lows are sufficient, period. It's just the way it is. I'm sorry. In a bear trend, once we get to 4 out of 4, then lower highs are sufficient because that's the trend. Okay, so what did you do to build the tool out of that? I'll show you right here. Here's the traffic lights on a line chart, but more importantly, here's what matters. It was sell mode on the S&P, so we can see it right here, right? Take your foot off the gas, even though we're in buy mode. So there's 2 modes, buy or sell. We're still in buy mode, right? Technically. Well, yeah, be cautious. And then pretend we're on the highway while a deer jumped onto the road. What do? Well, you should stop. Otherwise, you'll get into an accident. So stop. Then we stopped out, sell mode. So what do? We wait. After the market goes into sell mode, now it is due for an alert. I'm going to get into this later in the video, so please just bear with me. And after that time, now we got back to green and we actually got a buy signal. So sell mode starts it, radar scans, and then we get the alert. Well, that's what I talked about in the last few videos here. So we got an alert on the 24th for the S&P 500. And on the same day, we got the signal here. On the 24th, we got a green light and we got back to buy the dip mode. 2 green lights in a row. Well, that's exactly this. Close above the candle high for 2 days in a row. So again, the rules of the road, the rules of trading, and the rules of the algo. The algo has conditions. There's rules. It does not care about feelings whatsoever. So the next window right now is that stocks could go higher for the next 3 weeks. That's what I heard about this. What's inside a SPY? 500 individual stocks. So what makes up these 500 names is what could be bullish. I don't like this idea. I didn't buy it. Sorry, I did order it for illustrative purposes, but normally I would have not have. Let's move forward now. So now we understand that there's a report. Now let's look at this end of day report because this is likely what you will be interacting with more. So here is the entire document as of today. There's a lot of stuff in here. I'm not going to lie. Why? Well, because like I said, if you want to go to get your driver's license, well, you got to go to class first. You get your learners where someone watches you, and then you go and get your driver's license. Well, that's what you should do here. If you're not successful in trading, or you are, you clicked on this video and you're still watching because you want to see what I do, or you want to see what another method is to trade stocks. That's me right there. So I'm going to tell you, my job is to order wisely. We get hundreds of ideas. There's always ideas. My job is to choose wisely. Okay, so what do we do? Well, pause right now if you need to. There's rules. So everything is filtered. We don't get FOMO if we action this PDF. This can get emailed to you at the end of day every day. We're looking for ideas that are above 2 risk reward. So if we're going to risk $1, we want to make 2. Flip a coin, make 2. Flip a coin, make 1. You get it. It's pretty simple. All orders execute at 4 o'clock, no exceptions. Everything is filtered to make it easier for you once a day. That's the 5 minutes a day. Once you understand these rules, it should be very easy, like I showed you at the beginning. You need to be able to do these things, though. There's 5 steps. So know the business, understand the risk reward, understand if it's an early signal, watch the window of opportunity, name the catalyst. That's the really important one there. If you can't state the catalyst driving the window of opportunity, it's not a real setup. So if you can say no, you should say no. And then how I use the algo. So know the company, respect the risk reward, and execute at the close with a bracket order. The algo does all of this for me when I click buy. My job is to order wisely. My money works for me because this process is teachable, scalable, and repeatable. The system forces patience, protects capital, and removes every bad impulse, all in 5 minutes a day. So here's my current portfolio. It's up by 8.1%. Not bad. Cool. Here's all my portfolio. There's a lot of information, but it should be fairly easy to understand if you pause and look at it. Moving forward to page 2, here's my activity. I've been crazy buying right now. So we can see what's been going in. We can see what's been getting trimmed. We can see what's been getting added. It's a summary. It's your end of day report or a summary report. After your report, you can go through mine, and I'm only up by 4.2, so the algo was beating me right now. But anyways, you can see everything that I've done once a day, because again, I action everything at the same time you do, at 4 o'clock. Trims and exits and stops are all automated. In terms of actions, entering, adding, those all happen at the end of day. Here's everything I did. But here's the part that matters, like I showed you at the beginning. There are just these ideas here. So we see the name of the company, we see the logo, we see the type of alert, we see a risk reward, and then we're told whether it's passing or failing. This one's above, this one's not. There's an X. So passing, okay, cool, I'll buy it. If we've done our homework, that's all we need to do. Come to the report, go to page 6. If I know there's invest ideas, I should probably just come back on the 28th or 27th because that's when they actually pass. Moving forward here, we're going to look at the next section because this is the radar for Art Invest. I'm already getting all these hot tips. There's trucks, which we're going to talk about a little bit later, and it's yielding a current forecasted risk reward of 3.9. It's also telling us that it's within 0 candles. This is for a monthly candle, so anytime between now and the end of the month, it could pop off. We have a system to scan it. And if it rallies by 8.3% more, we're going to get that alert. So I already know what will come due. There's no FOMO. I know when I will action it, and I know what the idea will look like when it actually pops up into the feed, which means I'm predicting the future. That's our radar system. The radar is happening all day, every day. So right now, Tronox is rallied by how much today? 15% today, or sorry, 11% today. 15% just today, which means that if tomorrow it does what it did today, the system is basically saying that you should expect to see this alert on your end of day report here. That's what this page means. It's really important. It only happens once a month. So if you're an investor and generally hold on for months or for years, that's all you need to do. You action once a month. Check in on the last day of the month. That's when we action. All of these are filtered by high to low. So if I recognize the company, I already know there's ideas coming due. So we got Moderna, we got Accenture, we got General Mills, we got the Dow, we got Target. Generally speaking, I like to buy the top ideas because I'm getting better risk reward. So right here it's 6.2, here it's 3.9, here it's 3.4. We'll go through this example specifically in my 401k account later in this episode. All right, let's move forward here. So same idea here. These are going to be actioned on a weekly perspective. So at the end of this week, it's also the end of the month. So it just so happens we're going to be ordering everything on Friday. Same thing here. I'm going to talk about FactSet. And there's no surprise why. It's the top idea. It's the best risk reward. If I'm going to risk $1, I'd rather make 4 than to make 2. That's the easiest thing to look at. It does require the plan like we talked about before, but to not overcomplicate things, that's pretty much it. That's the first part here. So I personally know everything, what I need to do before I click buy. It's 1, 2, 3, 4, 5. Build a watch list, understand what you're risking, which actually means having a plan, understand what the urgency is, or whether there's a whisper or an early signal, the window of opportunity, and then name the catalyst. So just choose wisely. We got tons of ideas for you. And then finally, we need to understand what these different dots mean. So I'm going to go through it a little bit later, but at a high level, a whisper alert is an early signal. We risk 0.5% of the portfolio when we see this one here. And then we add on trend confirmation. We have a trade signal, which acts on a one-day chart, which gives a window of opportunity or an expected holding period of 3 weeks. Buy on the weekday at 4 p.m. Swing, buy on Friday at 4 p.m. The window of opportunity or expected holding period is 3 months. If you want to see these notes after the fact as well, they will be here on YouTube. You can also come visit me at thealgo.com if you want to. So everything's in here if you want to go look at it after. It's fully transparent. There's nothing to hide. Invest alert, these are due at the last calendar day of the month, or we add on the last calendar day of the month. These are usually good for a year. That's our expected holding period. So if you see ideas that say invest, you need to be investing to get the most out of them. That's part of what choosing wisely means. The algo identifies our window of opportunity and our expected holding period. There's also other things that go into our system, like why do we buy 4 o'clock? What is an LOC order? What is an MOC order, right? What is a bracket order? What happens if an order fails? I'm not going to go through all that because this video is going to be hours and hours. So if you're finding yourself tired, right, thinking about your stocks, paying rent, well, you're getting decision fatigue. And I got it too. I've made every possible mistake in the book. And I did them twice just for good measure. So Mike had his way with me, right? He ravished me. He destroyed me for a long time. I just got tired of doing it. So we incorporate all of this into our system. It seems really easy to click on buy. And like I showed you, it's really easy. We got tons of ideas. I'll just go refresh here. We got a lot of ideas. I can click on buy on a million ideas right now if I want to. Not a million. There's like 10 or 20 in here, but should I click on everything? Probably not. That's the whole point of choosing wisely. Here's what we do. We have to make a plan. Maybe others don't need a plan. Maybe others need a plan. I don't. Well, you're reading it. I need a plan on every stock I buy. I always expect to be right. I'm prepared to be surprised. I'm prepared for the worst case scenario, which we're going to talk about in a moment. And then we have to be ready for a surprise. Just aim to be less surprised, not unsurprised. We always want the best case scenario, as I talked about before. And generally speaking, the worst case scenario for me is 1% risk on account. It's what I talked about above here. So we risk 0.5% on a whisper alert, and then we add another 0.5% on the algo alert. If all we see is an algo alert, we add 1% risk on the entire position. Again, you click on buy, we take care of all that for you. So remember, your job is the algo is a portfolio manager after you click buy. So you've probably gone through here a few times like me, right? Peak amount stupid, valley of despair, all the way back up to the top. That's the end of day report, very simply put. It shouldn't even take 5 minutes. It should literally take you 1 minute if you understand what to look for. All right, now let's look at an algo cycle because this is important. All right, this one's a little bit meaty, so let's jump into it here. So you're probably familiar with this chart. This is the stock market psychology chart. It shows us what happens in a normal cycle, right? It's a cycle. A cycle is something that happens where we go up, we go down, we go up, we go down. Peak of Mount Stupid, valley of despair. This is the point of maximum financial opportunity. Probably a good place to consider buying. Point of maximum financial opportunity. Point of maximum financial risk. Yeah, we want a GTFO there, and we want to buy right back right here. So here's another version of the same chart, another cycle, right? The psychology you're saying to yourself, pause if you want to. Another one, a bell curve. This is the psychology of an investor as well. All right. Same thing here. It just looks different. It's a cycle, right? It looks like a wave a little bit. Okay. Following so far, here's mean reversion. So mean reversion basically means this. Here's your mean, or like a moving average. We go high, we go low, we go high, we go low. We always come back to the mean. It's like home base. If we go back here to where's a good mean reversion we can look at? Mean reversion is basically this. So we go down, we go up, we go down, we go up. If we look up here, it's like there's a wave forming. So we go up, and then extrapolate it out. Down, up, down, up. That's what we're doing. So we convert all of that to simplify it into this. It's called the stock market cycle. There's 4 stages: accumulation, markup, distribution, markdown. They're color coded here. So green is green, blue is blue, yellow is yellow, red is red. All right. Now let's add the algo sauce into here. Here's what we're looking for. It's pretty simple. There's 4 stages. We're basically looking for this. We want to sell at the point of maximum financial risk, and we want to buy at the point of maximum financial opportunity. Sounds easy, huh? In theory, it is, but this is like extremely complicated. If we look here, simply put, our algo whisper looks to time like basically the exact bottom as it's going up a little bit. The algo is usually a little bit later to the party. He's roughly right here. There's nothing wrong with being a little bit late. There's still tons of upside opportunity, or that mean reversion we talked about before. So up, down, up, down, up. Yeah, that's all that happens. We're either in sell mode or buy mode. That's what I showed you before with those SPY signals. So there's no confusion for me. The chart is either going down or it's going up. Okay, so how can we use that? We do this. Signal is going to be our, we call that trend now. So our signal is our trend. The algo signals the sell mode or the buy mode. So we go here, look right here. We go to the top, and then what happens? Well, a new cycle starts. So we go all the way to the top. We distribute, then we mark down. We go down, then we carve a bottom out. So we go from right here. So high, low, high. And then from performance chasers, we go right back to permabulls, all the way back down, all the way back up, rinse, repeat over and over. That's why it's called a wave, right? A cycle, a wave. So our job is to make sure we understand what happens at different parts of the trend. Pretty obvious to me. So when it goes green to red, it's probably time to sell. When it goes red, it's not time to buy. When it goes red to green, might be time to buy. When it's green, it's time to sell because we're selling into strength. That's our motto. Trend continues upward. So we're going sideways, we're going down, we're going sideways, we're going up. It's the same thing on every single one of these things that I showed you. So at the top, we basically flatten out, then we go down a little bit, then we go down fast, then we stop going down, then we go up a little bit, then we go up a lot. And then optimism leads right back to optimism. The wave starts all over again. It's the same thing as the top one here. Disbelief leads to what? A disbelief rally. We go up, we go down, we go up, we go down, we go up, we go down, we go up, we go down. I know I'm probably getting a little bit annoying. So that's the whole point. It's a cycle. It's repeatable if you know what to look for. So what we do is we convert these signals into dots. The dots tell us either good or bad. You probably know what red means. Again, red means stop. So if you're getting confused already, let's just look back to here. When the chart's going down, you feel hopeful. Remember, everyone likes buying discounts. Everybody loves it. Black Friday's coming up. You're like, oh my God, 70% off. I never knew I needed this thing, but at 70% off, who can say no? That's the whole point. That's why there's a slope of hope. That's why it's so predictable. And that's why the wall of worry is never good, because you think, oh my God, it's not going to happen this time. Just pause right here, right? Oh, the crazy people are going to get smoked. They're going to get taken to the cleaners. What the hell? It's so predictable. So that's why there's cycles. It's because human behavior is predictable. The market is made up of lots of individual traders, including you and me. So the crowd sells pain and buys comfort. The professional does the opposite. The problem is there's not very many professionals. So it's pretty lonely. Yeah, it's pretty lonely because out there, retail has no effing idea what they're doing. Accumulation, that's when we're red. Markup, we're going red to green. Markup, red to green. Markup, red to green. We want to buy at the point of maximum financial opportunity, which means we try to buy when there are fresh ideas and it's oversold but trying to go up. And when the candle closes above the alert price, we're getting early evidence. That's when we enter. So if we go back to here, it's basically what I'm trying to show you. Down, we stop going down. We're going up a little bit. So if we can go up a little bit, maybe we can go up more, maybe even a lot. That's basically it. If we form a low and a higher low and a higher low and a high and a higher high and a higher high, that's the exact same thing I showed you before. I'll just pop back to here because it's so easy. There's only so many best practices. So if we're going down, remember, lower highs are sufficient until we print a higher high. But we have to keep doing that. We have to make progress. High, higher, high, higher, high, low, higher, low, higher, low. The trend changed. Oh, after a trend change. Yeah. I hope you're getting it. I really hope you're getting it. Okay. Let's move forward here because now we're going to add in a few more things here. So we use our money line, which we call the trend. And now we're looking for a few things. So the radar is scanning 24/7. You don't have to do that. That's our co-pilot. Alert. Well, now we have to just know the distinction between a whisper alert and an algo alert. The order gets queued up like I just showed you over here. So I can go back to my account. It's queued. If I go to my portfolio, the order's not in my active account. It's queued up to order at the scheduled time. Okay, that makes sense. And then if at the candle close, it qualifies the idea and it closes above the alert, well, then we enter. The algo executes all of our orders as we talked about before. It becomes your portfolio manager. So oversold and early in the markup. Oversold and attempting the markup stage. A reversal. Whispers tell you buyers are testing. Algo confirms they've arrived. Remember, there's conditions or rules that go into everything we do. Putting it all together, multiple cycles come together when you're presented with an algo idea. There is power in knowing how these all interplay and how patience, discipline, and risk management are all baked into every idea the algo platform serves you. So clicking on buy seems really easy, huh? Yeah, it's because I've literally spent years and years and lots of money trying to build this thing for me because I blew up more than once. I was not a good trader when I started. I made every mistake, like I said, and Mike, man, he had his way with me, ravished me. So there you go. Maybe this makes sense now. I look for I'm a one kick specialist like Bruce Lee. I don't try to do a million things. I do one thing. I buy stocks that are oversold, going up a little bit that I think can go up a lot. AKA buy low, sell high. If it can't go up a little bit, how the F is it going to go up a lot? We also want to sell into strength, which is where distribution happens. That's literally what the big guys are doing. The whales, they're distributing. Okay, well, let's sell when they're selling. Exactly. So trim ideally happens during markup. You can see it right here. There's a transition from blue to yellow. So we go from blue to yellow. We want to trim into here. That's our de-risking event. We want to sell at the target, which is where? In distribution, before we get to markdown. Oh, so trim ideally happens inside a markup. The target ideally happens inside a distribution. Sell at the double top. Sell at the mean reversion. Sell when everyone's performance chasing. When everyone says, oh my God, the stock can't go down. Probably time to sell. So remember, we're trying to enter everything when it's red, attempting to go green. It's not actively green. That's the whole point. There's 4 stages. We're trying to time things. So we better make sure we know what our risk is on that position. So even when the candle closes, we're not late. We're still fairly early. We're still fighting the trend. It's just a bounce. It's not a reversal. But now if we convert this into a chart, and I'm going to explain more on this a little bit later. Video's already getting pretty long here. Didn't think it'd be this long. But anyways, here we go. Here's an idea. DJT, Donald J. Trump. So here's a chart. Let's make it a little bit more easy to digest here. So the stock is deeply oversold. That's why it has 2 whispers in a row. we can actually get up to 4 in a row before we actually have an issue. Sorry, before we get the alert. So if the risk reward is really high, usually means the stock is quite oversold. Look here. That's a crush. Went from 14 all the way down to 10. Like that. It lost 40% of its value, basically. Poof. So yeah, that's a nasty cut right there. So it's deeply oversold. So it requires a few alerts before it goes higher. So if you're someone who regrets when we go down, you don't buy these ones. You buy later into the cycle. I'm going to talk about that in a future video. I'm not going to try to confuse you now. So this might look a little bit more familiar now. We're deleting candles here. So up, down, up, down, up, down. Okay, I think I'm getting it. So up, down, up, down, up, down. Yeah, that's what my eyes see. That's what my system is built for. It's built for me. So we're going up, down. We're trying to go back up. Sell into the strength. Sell during the markup. That's your whisper alert right there. That's our trim. So if we enter the stock, which I already did, our average is at 10.59. Let's look at a live example. Let's go to a portfolio. Let's type in DJT. It's live. It's right there. There's our levels. We got it. Okay. So we're currently sitting here at 1074. Our trim is at 11.15. We're pretty close to our trim. If we trim, we can't lose. So remember, trim ideally happens during markup. Stock's being marked up like inventory. Oh, okay. Oh, okay. Oh, okay. So in this example here, we're using a trade alert. Again, yellow trade alert. So these will get familiar too. There's the pink dot we talked about. There is the trade alert. So trade whisper, right? Trade whisper. Okay. Trade whisper, trade algo. Oh, sell into the distribution part. Sell right here. Look where the target is. I hope you're understanding here. So look, we got the red box. We got the red box. We want to sell into the yellow period. Distribution. We don't want to sell when it's going down. I don't like selling when it goes down. That's why I built this for me. So what do? We sell into, we don't want to capitalize on every cent. We want to make the easiest part of the trade. So we call this the easy part of the trade. It stopped going down, or it's going from red to green, which means we trim it. We sell half. We de-risk it. And then we sell into the target, which is where? It's right here. Because remember, generally speaking, stocks do this. They go up, down, up, down, up, down. So why do we want to hold it through the down part again? We don't. We want to get the F out. Trend line goes red. I'm out. Time to protect the capital. GTFO. Here's the reason why we shouldn't have FOMO either. Week to date, and it's only been 2 days. I'm recording this on Tuesday night. There's been 138 ideas. Week to date for swing algo or weekly ideas, 38 ideas. And then month to date, 12. Here's what we have on our radar. Tomorrow, we could get up to 41 alerts, 132 swing alerts, and 85 alerts here. Look at these juicy numbers. 339, 15, 8 to 1, 6 to 1, 5 to 1, 5 to 1. I don't know what to tell you. This gets me excited because I know that tomorrow I could potentially get some ideas which will be very well received by me. I can also know that I don't need to wonder, what's going to go higher tomorrow? I have to wait. I wait for the number of candles, and then I wait for the price. That's it. Remember, our job is to order wisely. So with 744 tickers in our directory, with 3 time frames each, 1 day or trade, 1 week or swing, 1 month or invest. We can see that right here going to our stock feed. We'll just delete that for a second. So trade, 1 day, swing, 1 week, invest, 1 month. That's it. So we go 744 times 3, which means that right now we're tracking 2,232 unique screeners that are running. That's the 24/7 part. And we had as many as like 2,000 stocks in our system before. The issue is that we want to focus on blue chip names. So we have every stock in the S&P 500, every stock in the NASDAQ, and then Justin chose 557 stocks that he likes. So we want to make sure we understand how the system works between now and end of the year. And then we will allow unique stocks created again starting in 2026. If it has a candlestick, we can tell you what it's doing, buy and sell mode, and we can tell you whether it is an algo alert or not. All right, so that was the Algo Cycle. Now let's move forward here to the Algo Portfolio. So How do I take all this and actually make money? Pause right now if you need to. So we do these things. The ideas get generated. We say yes or no. That's it. We don't make any decisions. We just click on buy. So we go to here, we go to my portfolio, we go to ideas. Our job, I click on sort by risk reward. Again, by default, it sorts by alpha here, which means by date, high, low. I click on risk reward. I want to make a lot of money when I choose to buy. I'm going to get stressed out. I'm going to be thinking about the name. I'm going to get mental capital. I'm going to get my bank capital. I want to get paid. So it's flashing green. It's above the alert price. You can see that here. The price is green. If it's red, it's flashing yellow, which means it's actively below that alert price. We have that in the report for you as well, by the way. I can click on buying any one of these. The point here is that I don't get to make any decisions. It's just yes or no. Okay, just yes or no. Just yes or no. That's it. Let's look at the notes now. So the algo does the rest. The skill level for this one for me, it's pretty easy. Why? I just click on the button. I click on the button. Shadowing, pretty easy too. If you look at my channel, I'm not going to do it now, but you can see all of my idea feeds. You get the report at the end of the day as well, like we talked about. All right, now let's go all the way back up to the top here. So decisions happen between 3:30 and 3:50. I generally do it as close to the end of the day as possible, usually around 3:50, because the alerts are likely to qualify by that time. If it's lower by 9 a.m. and 4, I don't really care. I make my decision at the end of the day. So looking at here, remember, we also get radar for what is due. So there should be generally no surprises on what's going to pop up on this feed, like trucks. It could show up tomorrow. I already know that I'm not going to be surprised. I've made my plan for it. I'm going to go through that in the next section here. So now we're going to talk about donut. I think it's donut on this one here. Maybe we'll talk about fact set. So on here, we have invest ideas, which we action on the last day of the month, which is Friday. Or we have some swing alerts, which action on the last day of the week, which is also Friday. So on the 28th. At the top left, it's the best one, highest risk reward. It's filtered here. So 4, 2, 2, 1. So what should we want to buy? Well, we got to make sure we know. We go with the best risk reward if we understand the business. So if you want to go to this card here, it explains all of these notes as well. It's right here. How do we buy or manage risk? There's a lot of notes. So again, to keep the video under an hour, I think. I'm not going to go through all this, but again, this is how we plan for the worst case scenario. So go to the link if you want to. Now, going through here, remember, it's one page. This is your introduction to how to trade like Justin in 5 minutes a day. My job is to choose wisely. So how do we choose wisely? Make sure we understand what the dots mean. Is it time to stop? Is it time to go fast? Are we on the road? Are we on the highway? Are we on the Autobahn? This is the most important part, though. This is what I do to make a plan on every single stock. And then I choose very wisely. Let's go through here now. I'm going to go through number 1, 2, 3, 4, 5. So pause right now if you need to. Number 1, if you don't understand what the company does or why it moves, skip it. Really? Invest in what you understand? Yes. Number 2, if you're going to risk $1, why not make 2 or more? This page only has high quality ideas. All right. Whisper. Early signal. I showed you the example earlier. So in the survey you're going to take if you decide to onboard with us, we're going to ask you what you regret more. And that's exactly what we have here. So what should I do, Justin? I don't know what to do. I don't own the stock and I'm not sure what to do. So if you don't own it, all you're going to do is regret if you don't buy and it goes higher, or you do buy and it goes lower. That's it. So if you know yourself, then we incorporate that for you. Like I said, if you regret when we go down more than when we go up, like you have more fear than FOMO, don't buy the whisper alert. We'll talk about that a little bit later. So now for number 1, what does this company? Oh, sorry. Let me finish off here. Number 4, the window of opportunity. So when I see this type of alert, which is a swing whisper, it means it's good for 3 months. I have to think about, do I like this stock for 3 months? Am I going to put my capital into the stock for 3 months? Am I going to like it today, hate it tomorrow? Or am I going to actually give it the time it needs to flex and do the idea, which means the mean reversion? So if we're looking at a weekly chart, we got to wait for weeks. If we're looking at a monthly chart, we have to wait for months. If we're looking at a daily chart, have to wait for days. Every candle takes days, weeks, or months. All right, with that out of the way, let's go through the idea now. So what is fact set? That's number 1. I'm not going to go through and re-explain what every number is here. I'm just going to explain what they are in order now. So What is FactSet? Well, I'll have a look right here. FactSet provides financial data, next-gen AI tools, and dedicated to support clients see more and do more, blah, blah, blah. All right. What's the risk reward? Oh, 4. If I'm right, I make 4. If I'm wrong, I lose 1. Yes. So we call those units of risk and units of reward. It doesn't mean make 4% or lose 1%. It means that's the units we're risking. For every $1 we're going to put into the trade, we can make 4. But we have to size it properly. So in here now we know that we're buying half of the alert size. Then we go to our recipe here, which tells us that how to make a plan and avoid regret with only having to click on buy. Again, seems really simple. Go here, click on buy. Yeah, we do it for you. So how to make a plan and avoid regret. When we are looking to initiate a new position, we will regret both of these. I buy and it goes lower, or I do not buy and it goes higher. We're going to regret both. The question is, what will you regret more? If I do not buy and it goes higher, order the whisper alert. If I buy and it goes lower, don't order it. Wait for the algo. You're not late. You're going to avoid the regret. You're going to have the ability to hold on. All right. What do we do then? Whisper buy at the last day of the week, add on the last day of the week. That's it. Half and half. Or you go full if you only see the algo alert. Here's the time frames. So we're focusing on the swing algo, which means that we're looking at the weekly chart or 1W, and the window of opportunity or expected holding period is up to 3 months. Sometimes stocks move fast, but generally speaking, we want the cycle to repeat. We want to be consistent. The alert should be matching with our expected holding period. No exceptions. Our edge is in identifying the potential catalyst for that window of opportunity, not just for a bounce, but for a reversal. Every stock gets bounced, right? That's called a dead cat bounce. We don't want to buy dead cats. We want to de-risk into the dead cat and hold on for a long time. All right, moving on to number 4. So number 4 means our window of opportunity. So now I know I have an idea that's good for 3 months. Am I prepared to hold on for 3 months? What could happen in the next 3 months? I'll show you. FactSet is a technology and data company. All right, cool. Oh, next-gen AI tools. I wonder if they're working on something like they could have a news release or something. Well, probably. Number 5. Name the catalyst. Most important part, by the way. If you can't state the catalyst driving this window, it's not a real setup. If you can say no, you should say no. Now, the stock looks great. FactSet, cheap today, cheaper tomorrow. Trading at 15.4 PE. When the EPS just only goes up, the sales only go up, and the share count actually has been reduced from 39 down to 37, which means they're either buying back shares or something else happened. That is effing great. So what does that mean? Buy. When I go back up to the top here, when I see FactSet in my brain, I go through my 1, 2, 3, 4, 5. I don't need the list anymore. Remember, the system's built for me. So when I go here, I see FactSet 4-1, sign me up, buy, click the button. I don't think twice. Meta? Not so sure on Meta. I like it. I like it better than DK&G, but do I like it enough to risk money on it? I don't know about that one. I like this one for sure. All right, let's go through a little bit further here now. So we got through the idea. We talked about all these things. But here's what it looks like on the system. So we're going to go back to here. We got FactSet, FDS. I'll just click on the icon to narrow it down. Now we can see all the info. FactSet, swing, algo. Okay. Now we got all the levels here. 4.3 is the number we're looking at. Our stop and our target. For simplicity, we don't show that to you on the report. You should know what we're doing if you follow the rules of the road. So number 1, number 2, number 3. Then we go over to here. Here's what the algo sees, by the way. So what does the algo actually see to derive that 4-1? Well, there's 2 charts that matter. There's our screener, like we talked about before. So it's scanning those 2,000 plus setups to see, okay, well, now I like this one. Why does it like it? Well, again, that's part of our secret sauce. Then we refine that down to an idea with 2 brackets. Bracket number 1 is trim and stop. Bracket number 2 is stop and target. So order number 1, order number 2. De-risk and let your winner run. If it goes to the stop, we're all out. If it goes to the trim, now we wait for either the stop or the target to hit. That's it. You can visually see the risk reward though. So if you look here really closely, like if we go down and print a lower low, like we were wrong about a reversal, we want to get the F out. But if it goes up more, if it goes up a little bit, maybe it can go up more, maybe even a lot. Cool. Let's make some money. 4-1. So again, you go back to here, you click on buy. All right, I already clicked on it too many times already. So there's already an idea for it. But this is the idea for FactSet right here. So I can see the weight. This is going to be 4% because it's half a size, because it's a whisper. So 4% now, 4% later. That's right. So it's 4.4, 4.5% rounded down. So we have the stop, which is going to be 11% lower. It's right here. Just do the math. All right. We did the math for you. So the stop is 11% lower. And for us to risk no more than 1%, remember, it's a whisper alert. So 1% total once we add. We're going to have a total weight on account of 9% based on $100,000. We know the dollar amount below that. So just doing some quick math here, I'll show you what it is. Just right here, we can go 0.11, which is going to be the stop loss, times 0.09. That equals basically 1% risk on account. If you go to the link over here, you will see all of the examples as well. Again, just for time, because it's already been a little bit longer here. I wasn't planning to be on this long. It's all here. So here's a live example for FactSet. I'm just showing you the screenshot so you understand that, yeah, clicking on buy seems like easy, but man, you guys are doing a lot of work for me. Yep. And then the ad, that happens automatically at the next candle close or the algo alert. So buy 17 shares now, which is worth 4,500 now. But then we make sure we adjust the risk if the stock goes higher, which means we're going to buy a maximum of 17 shares. We have to do the new calculation. So as the share price goes higher, the stop loss is the same. That's what invalidates our idea. So if the share price goes higher, our risk versus our reward is going to get reduced, which means our stop loss is going to get wider. If our stop loss gets wider, our weight is going to get smaller to maintain that 0.5% risk. I know this is complicated, so I'm trying my best here. So I'm going extra slow. If we look here again, that's all you got to do. Just click on buy if you know those 5 steps. All right, finally, here's a stock that I don't understand. It's SLB. So let's go back up here, SLB. So right when I look at them, I'm like, oh, 27 cents if I'm right, and it's below the alert price. Man, the stock stinks. So why is it even on the list? This is a pass example, SLB. Why do we pass on it? Well, I don't really know what the business does, to be honest. So what was the first thing that it said? If you don't know what drives the chart or what they do, you should pass. So I don't know what this company does. Do I know them well enough to have an informed opinion? I actually don't. I do know it's a member of the S&P 500. And remember, we had that SPY alert before. So it's not that it can't go up. It's that I like making $4 to risk 1 instead of making 27 cents to risk 1. This stock is not above the alert price. And it's only going to give me 27 cents if I'm right. Okay. So here's what the algo sees again. Number 1, number 2, you just see these numbers right here, 0.3. That's all I really care about. I know what the stop loss does. So we go through here. Here's the screener. It likes what it sees. It's going down. You see the left side of the wave. It might go back up. Might repeat the wave. Exactly. That's all we're looking for. It's just that wave. We narrow it down to an idea like we're showing you here. And what do you note? Well, in this setup, the trim is above the target, which means we're not even risking $1 to make $1. For us to, we can't change the stop. That's what invalidates the idea. So we have to tolerate a lot of risk for a little bit of reward. The trim's not going to execute. We're going to be exiting at the target. So what this basically means is that we're not even risking $1 to make $1. What we would have to do is for the stock to go all the way up to here to make that same amount of risk. So we see, okay, well, I can make a little bit, but I could lose a lot. That's like a lot higher than where we are now. It is a lot higher than we are now. So this does not mean the probability of it going down is not good. It just means that the system prefers to make a lot more than $1 when we're risking $1. Oh. So what do? We pass because our job is to order wisely. Oh. How do we do that? Well, again, go up to the crosswalk, hit the crosswalk light, look left, look right, then proceed. Have a plan. What am I going to regret more? Well, that's the whisper versus the algo. Assess. Do you understand what this alert and a type is? The window of opportunity, the holding period, and the reason why we're going to buy? If yes, click on buy. Click on buy. Just click on buy. If you don't, you can either ignore the idea or click on the recycle bin and it will delete it. I'll delete one now to show you what that looks like. So what's a bad risk reward here? Stellantis, poof, bye, deleted. Won't be there anymore. Poof. Stellantis is gone. I don't have to think about it anymore. It's not cluttering my desk. And remember, we literally, week to date, just in the last 2 days, have generated 138 trade ideas on the one day. 38 on the 1 week. That is an effing lot. And we have this many coming due. 41 for a trade alert, 132 for a swing alert, and 85 here. Look at these juicy risk rewards. That's why I never feel FOMO. I always know there's new ideas around the corner. So no FOMO. We literally have hundreds of ideas all the time. All right, last section here. 401k account, highest difficulty here. Let's try to round this out in just under an hour here. 401k, idea generation. I scan for ideas and opportunities. I mostly focus on invest ideas, which is that the example I showed you with I think that was with Donut before, and Donut's in my portfolio, so that's the reason why. I use discretion on how and when to enter and size up. The skill level is difficult for me. The skill level to shadow is fairly easy because you can see all of my orders. You can see literally my portfolio. I share this every weekend, and you're going to get it in your end of week report or that Jusin report, which we talked about at the very beginning. It's going to include all 4 sections. The S&P, I'll go back up to the top to remind you. So S&P, the Algo, 401k, and then ideas. So I told you how the system generates ideas. Well, I generate ideas similarly on here, but it's not exactly the same. Over here, I'll show you what stocks I like. Oh, Stellantis. We just deleted that one. Yeah. Had an algo alert. UPS, active algo alert. WPM had an active weekly alert. Moz and NTR, I like those ones manually. So 3 out of 5 are system generated. I see the alert. I look at it. I say, okay, well, I like Stellantis, but I don't like it that much. If I go here to say UPS, I think that's one that looks pretty good right now. We can go to the stock feed. I think it was out last month. Let's double check. Let's go to October to today. There we go. That's the one. So I like that one right there. It's a whisper. We know it should be due for a radar. Let me just double check and make sure it's here. There we go. So now I know that it's due within 0 candles or 6%, and now it's 2 to 1. So as the chart continues to advance, the risk reward does go down. So we can go here. Let's go back in time. Because the risk reward, when it generates a whisper versus an alert, well, it's higher risk, higher reward. So 2.74 versus 2. So that's why I have it on my watch list. It's because the algo told me to look at it. Again, I cheat off the algo. I don't make any gripes about that. I just cheat off of him. He's great. All right. So now we understand what to do. The bind. So this one here, actions. I review my portfolio on the weekend. My decisions are largely made based on the buy and sell pocket. So when the buy and sell pocket is low, it's very similar to the platform here where I want to make way more than $1 when I'm getting in. So I don't want to buy these stocks. Make 6 cents if I'm right. 14 cents, 25 cents, no thanks. 30 cents, no thank you. Well, it's the same thing on here. I'm at this level. Again, if I just look at my sheet right now, so I can look here, I'll just go to the live sheet so it's a little bit easier. If I look right here to say like Trox, which we're going to look at shortly here, well, at this price of 3.9 relative to my buy pocket, where I should consider buying and where I should consider selling, from this moment, I'm risking $1 to make 80 cents. On Playboy, it's 0.3, sorry. So make 30 cents if I'm right, lose $1 if I'm wrong. So now it means that we're approaching my sell area. So that's where I consider making a decision. It rallied a lot. It's up 38%. Excellent. I'm not going to go through every detail in this video, though. So that's what basically drives it. Decisions are driven by the risk reward in the buy and sell pocket. If a target gets hit, I generally move the target up. So let's pretend that now I want to trim some of this one here. So I trim it. Let's look at Playboy. So it's at 1.84. I'm just going to pretend now. So if I trim, I would trim, like, say, I don't know, like, actually want to buy more, but let's pretend we wanted to trim it so we can reduce by half. And then what we do is we raise the target. So I might go to, like, say 5 or something. And now the risk reward gets skewed because this number stays the same, but I am now unwilling to trim more unless we go to here. So now the risk reward gets updated. Now it's good, but I have to be willing to ride it all the way to the high or all the way back down to the low. That's it. It says 0.2. Watch out. That's Zoom. Zoom definitely zoomed today. So where did it get to? 88? Sorry, that was my number. I think I might even got there today. I was happily surprised to see it up. So made it here to $91. In this account, like I said, there's more discretion. If I had a sell order in at 88, I would have sold some. I didn't. So now I know that I can sell now, I can watch it, but I'm getting visual evidence that I'm close to my target. I should assess it. During the week, if the numbers go red, I need to be mindful of them. If the number's big green, it means that's real. That's a juicy risk reward. Same thing here. It's close to my stop loss. 265 versus 25. That's where I should want to trim and roll the money to here. Okay. And if you go to the Help Center too, there is a page on how to manage Justin's account and even use my my template here. So go to our Help Center, help.thealgo.com. All right. I'm pretty tired. Hopefully you guys appreciate this video because I didn't think it was going to take me an hour to do. It's pretty late here right now. All right, goal is different in this account versus the Algo account. We want to primarily focus on invest ideas, which means the monthly chart. We're looking to hold on for potentially a year, right? Up to a year. If they run really quickly, like, oh my God, some stocks run really fast, like MP ran fast. Which other ones ran fast? SEDG, BW. Yeah, trim them. It's up to a year. So this one here, what we want to do is we want to fund the position. We want the money to work for us. So in our other account, we de-risk by selling half because then on the balance, it's free. Well, over here, if the stock is 100% funded, it's literally free. I have a free position on the S&P, a free position on the NASDAQ, a free position on BW, and every other stock that is funded here. If it says 100%, it's fully funded, if not more. Oh, so it's working for free? Yeah. So that's the open profit and loss versus the realized profit and loss. The real profit and loss, like say on AREC, if I go here, quick example, this one right here is not so hot right now. It's negative 30% open. That's my open profit and loss. My realized profit and loss is 100%. I've paid for the whole position, so I'm giving back profit. That's much better than losing, making money and then giving it back. That's the cycle part. You buy at the low, it goes to the high and you average up, then it goes back down to the low and you're red. Oh, choose wisely. So remember, I showed you there are dozens of invest ideas. There's tons of them all the time. Right now we got 12 for this month. We go to our radar. There's 85 that are coming due. Like there's no shortage of ideas. I got to make sure there's capital in my account that if one of these ideas comes through and I actually want to buy it, I do not want to have to sell something to buy it, which means I trim regularly. And I'll show you some examples at the very end here. So now we're going to go through the 1, 2, 3, 4, 5. So the algo is going to help me, but I have to manually have the discretion here. Know the business. Understand the risk reward. Is it a whisper or is it an algo? What's the window of opportunity? Remember, on this account, we're focusing mostly on the invests. And then name the catalyst. Let's go. On the 12th of October, I said it looks interesting, but I need to dig in more. There's fraud accusations. I went through and looked at it. I saw the TI or titanium is on the critical mineral list for the government. It's right here. So there's all the different words. There you go. Titanium. Titanium is a critical mineral according to the US government. Hey, that's pretty cool. It is pretty cool. I shared this on October 12th. So as of right now, like I'm basically back to flat. So I'm building a position. It's not working out immediately. I was about to fire it on the weekend, actually. The stock's not been performing well. So now it is. It's back to roughly where I started. I've been holding on for a month and it's back to where it started. Here's their footprint. Here's what I like about the business. They're a global player. They're like the biggest global player. And what do they sell? Global footprint. Tronox is the world's largest vertically integrated TiO2 producer. Whoa. So titanium is critical. Oh, they produce in America. Their HQ is in America. They're in Brazil. They're in Africa. They're in Australia. They're in Europe. They're everywhere. Saudi Arabia, India. I don't know what that is. I think that's Japan. I'm not sure. China. And I don't know what that is either. But what do they sell? Oh, they sell concentrates. Sorry, what do they sell? They sell rare earth and other materials in titanium dioxide pigment. Okay. At the time, my buy and sell pocket were 3.2 and 7.7 on October 14th. So it was yielding a risk reward of 8-1. Hey, pretty good. So I bought it. So if now we look forward here on the 12th of November, I said I'm adding to my position. I'm increasing to 2.5%. It is due for an invest alert. The target is 12, and that should show up briefly here. Again, we've been squashing some bugs. So that's what I did. I'm front running the alert. Keyword there is being front running. Why would I front run it? I'll tell you why. I thought there was urgency in it. So now I'm front running it by initiating at 1%. I'm adding as we approach my buy pocket, which means I average down. And then I'm looking to hold on for 1 year. So there's no rush, right? Remember, there is no rush. We're looking to hold on for a year. So I can't get all loaded up in a couple of days and then expect to be happy holding on for a year. Here's a volume climax, though, on the 1 month chart. So I love volume climaxes. So what happened on the 14th? I said, this is why I'm part of why I'm buying it. It's at $4. It's back to $4. It's back here to 3.9. My average is 3.76. Cool. I averaged down a little bit, but here is the catalyst. Remember, let's go back to number 5. Do you know what this business does? If you don't understand what the company does or why it moves, skip it. Like Schlauberger, I don't know what it does. I have to go do, it does not warrant further investigation. I don't know what they do. Tronox, I know what they do. I did my homework. Remember, I said I need to investigate first, though. I see the idea. It's still on radar. We got a year to buy it. There's no rush. Here's a Bundesempfehlung document. It's all in Portuguese, so I'm not going to bore you with it. Let's convert it over here and see what matters. Oh, Tronox. Yeah. So they're potentially getting funding from Bundes. Remember, on the map here, what does it show you? Oh, they're in Brazil. Yeah, they are. 1, 2, 3. Oh, rare earth elements and titanium dioxide, and they're a global player, but they're headquartered in America. Yeah. But right now, the reason why there's urgency for the next year is that they're on the list. Tronox Pigmentos do Brazil. Excellent. Excellent. We go to Bundes here. We can go to their website. So if you're wondering, oh, well, I don't know why I bought Justin by Tronox. Well, again, that's part of what I do on every idea. I'm not perfect at articulating every one, or it's hard for everyone to see. That's why I'm making the video. And going forward, that's all going to be in your Jusin Report, which sends to your inbox once a week. This is from the Bundes right here. Jose Luis Pinho, and he is at 9 a.m. having a meeting to discuss the development and support for the Tronox business plan. WTF. Exactly, WTF. Last updated October 1. Oh, it's November 26th. So the reason I felt urgency was because I would regret if the stock went a lot higher and I had nothing. So I bought 1%. And then I averaged up to 2.5%. But my position's not full. Remember, choose wisely. And the alert's not even popped off yet. I got tons of time. So that's why I front ran it. I just showed you. There's urgency. There's urgency here. For me, there's urgency. Ironically, this company right here, Veritas, they just got a deal too. Excelente. All right, let's move forward. Without going into every little detail, I'm going to show you a couple of other quick ideas here. So October 8th, I bought AREC. That's the one I showed you that is now back to red. So what do I do? Hey, we sell into strength. I don't like selling into weakness. This is now back to red on the balance of our shares, or half the position-ish, but we funded it fully. So it is impossible for me to lose on this position, even if it goes to zero. It's fully funded with realized profit. It's real. It's not unrealized. It's not unreal. It's real. They sell concentrates, rare earth and critical mineral concentrates. For me, that is music to my ears. And it worked. Had the breakout. And then it fizzled anyway. So what did I do? On the 14th of October, I trimmed it. So right here, did I say when I bought it? I bought it on the 8th. Remember, it's up to a certain period of time. I would have bought more if it hovered around here. I only got 1%. It just started rocketing. Then what happened? I sold it. What day is this? October 8th. Here's the screenshot that I shared, October 8th. I said, it's breaking out. So why am I selling if it's breaking out? I sell into strength. I had to sell enough to make it free. So I trimmed at plus 74% and I reduced it down. So it was up by 74% for me. I reduced my position down to 0.7 or a free position. Pretty nice. So it went from 1% to 1.74%. I trimmed back 1% and now it's free. That's how I got to here in working for free for me. Started at 1, right now it's down here to 0.3%. It's getting pretty small. Why? Because the stock went down. It's not at 370 anymore. It's here at 265. I was up as much as 74%. Now I'm down by 30. So the position's half as small. Yes, of course, I wish I exited at the high, but that's a tolerable amount of loss for me. I'm giving back profit. I also had a huge update here where I gave an update and showed a trade review and blah, blah, blah. But this trade happened from start to finish in 6 days, October 8th to October 14th, where I de-risked it now. What chart am I looking at, though? I'm looking at the monthly chart, which means I am probably prepared to hold on for a year. Oh, it just happened to work out pretty fast. Yeah, that's the up to part. All right, a few more quick ideas here. So risk management, same thing. Wire position 7%. Well, that's because generally speaking, if a blue chip we aim for blue chip names or names that we understand well. A 1% loss on the account is going to equal to 15% decline by 7% weight, which means a plus or minus 15% move overnight is going to be our worst case scenario. If the position is smaller, like I have here for like Trox, and the stock swings, like, oh boy, does it swing. So I might not build it up all the way to that 7%. That's the maximum size, right? That's my maximum. So if the stock has more beta or moves more, it'll generally be a smaller position. I'll have a smaller position of something that's working, or if it goes against me, I won't get wiped out. So I don't use stop losses in this account because sizing up to 7% is the way that I manage risk, and I monitor it by looking at it. So we shouldn't be surprised with a loss on the account bigger than 1% per position. This is back in June. So remember, it's the same 1% we use on the Algo Portfolio. This is a lot more complicated too, as you can see. Going back to July as well, I reduced our trimmed SEDG to 3% and it's fully funded. I've trimmed it more since then. So now SEDG is not just paid for one time, it's paid for 10 times. I've trimmed it 1, 2, 3, 4 times now. Why? It just keeps going up. So if it hits the number, I trim it, and then I raise the sell pocket higher, brings it back to green. If I would actually buy it back down to 29 and actually sell some more at 49, excellent. I got 2.3 risk reward right now. It's above 2. My blended risk reward between all, 9.3. Add all these up, divided by the number of entries, it's 9.3 risk reward blended. That's effing great. And what did I do? I trimmed SEDG and I added plug. So take the profit from here and roll it into plug. I've now since exited plug because I didn't like what it was doing, but that's the point. Trim Bumble for 63%, and now it's 40% funded. Where's Bumble now? I fired it, so it was gone. But what I did is I took the money from Bumble or the profit and rolled it into Berkshire. Where's Berkshire? Well, I still got Berkshire here, so you can see I'm up by 6%. It's 13% funded. I rolled it into here. That's back in July. I also have some losers too. You can see right here, like Nova Nordic. It hurt me. I have a couple of losers here. I got Wendy's. I got EWZ. I got Zoom. Yeah, these stocks hurt me. They stung me. So I'm not perfect. I lost 1.2% on my position with that one. It gapped down massively overnight. So here's the note. So 20% on the trade, negative. Ugh. Negative 1.2% on the portfolio. Hit my pain threshold. So it's time to exit. Why? Because I'm going to regret it going down more. It's still on the radar for the monthly. Will likely take months to reset. Great. I will re-enter and reassess if it alerts. That was back in July. Where is it now? At the time, it was at 54. I don't even know where it is now. I know it gapped down recently. It's at 47. So what happened? Opportunity cost. It's lower than where it was. I would still be upset about it. It's beyond my pain threshold. Time to let it go. So sometimes, here's what it says too. I say, all right, I'm going to regret losing more. It's still on the radar. There's an opportunity to get back in if I want it. Let's quickly look here. I want to see if I can do this live. Let's go look in NVO. It's still due here. It's due. It's going to probably alert next month is what it's forecasting here. If it continues to go up, has to rally by 18%, and it'd be a 5-to-1. Hey, I would reconsider it as a new idea. I'm gonna forget about the previous loss, and I reassess every new position based on its current merit. At 5-to-1, I would consider it. Have to see what the setup is though. So I crushed many trades. This one got to me. C'est la vie, mon ami. So I'm not going to be perfect. You can see right there, Wendy's 2 is 0.9%. Pew. So do I still own it? No, I fired it. So sometimes I front run ideas. I will initiate at 1 to 2%. It's called a tracker or a starter. And then I add, if we come down closer to my buy pocket, I showed you that on Trox. On AREC, it just went higher. So I would have bought more. It just didn't come back down to my buy pocket. And then generally speaking, again, the stocks that I'm looking at, they're due for an alert. So I would have added, I will likely add more if we get that Trox alert. And then what? I will generally add more if we get this alert. But remember, my goal is always to get 100% funded. So what I always ask myself is it more important for me to hold on to the entire position, or like here for Playboy, like I have less than what I want, but like, man, it's crushed it. So right now I have an open profit of 0.2%. So just eyeballing it, I could sell roughly half my shares and 3/4 of my shares, and I could have a free position. Or I have to either choose to trim a smaller amount like I did here with Berkshire and then just see what happens. Because that's not a good number for me. I'm gonna have to decide what to do with it. Once the position's fully funded, I generally only reduce more. Like you saw with SCDG, which is now like 1,000% funded. Or if we look here to say like BW, I've trimmed it a lot of times too. Many, many times. This is a great stock for me. 1, 2, 3, 4, 5, 6 trims. Oh my God, stock's treated me so good. And I feel so good I still got some left over. I do mix and match the buy and sell pockets, which is what drives my decision making. It's the money line plus a little bit of magic and the alerts. So sometimes I'm deciding based on my discretion. Sometimes I'm buying based on an alert. Sometimes I have to mix and match. So this video is now a movie length. It's an hour and 15 minutes-ish. And I think I've given you everything you need to know to learn about my system. So in summary, we went through the report, which is step 1. We went through the end of day report. We went through the Algo Cycle, went through the Algo Portfolio, and then we went through the 401k portfolio. Hope you enjoyed this. And if you want to find out more, just come see me at thealgo.com. I think I have one more quick thing I can actually show you here because our website's now refreshed, so I can show you what's actually on here. No. If you are interested in coming to join me, just go to thealgo.com. Thank you very much for watching, and I look forward to seeing you on the next video.